Hi guys, good morning. If you can hear me clearly, kindly let me know. If you can hear me clearly, just drop a comment. Let's get started for today's analysis. So if you can hear me clearly, do not forget to drop a comment so that I can know that you can hear me clearly and we can start immediately. Let me know if you guys can hear me clearly. Let me know if you can hear me clearly so that we can get started immediately. All right, beautiful. I can see people saying they can hear me clearly. So let's get started immediately. Hey guys, you're welcome back to our live session. Here we, analyze assets that I am currently looking at, and also I am going to be picking assets, one or two that you want me to look at. So do not forget to drop or that you want me to look at. I might, pick one of them and make analysis on them. So you're welcome to our channel, you're welcome to our live session. So let's get started immediately. So I'm going to be starting with volatility 25 index. This volatility, this is what I'm going to be getting started with, and I'm going to be making analysis on this asset right now. Now this is 24 hours time frame. You know our custom, you know what we do. The first thing we want to do is get our directional bias on the higher time frame. That is just what we want to do on higher time frame, and for us to know the key zones it is possible for market to come back into. So on volatility 25, our last break of structure is obviously to the upside. This is our last break of structure. This is our last break of structure, right? To the upside. We have the last break of structure to the upside. And the low we are not expecting market to break, or that we are not expecting market to violate, since we have our last break of structure to the upside. We're going to get it marked out so that when market violates it, we know that we have a change of character. So this low is the low we are not currently expecting the market would violate in any means. And if it gets violated, we are going down. We are definitely having a change of character if we have it violated. So we're going to be protecting this. And whatever we're going to be doing, we're going to be looking out for a buy continuation pending the time market would say, no, I want to violate this particular low. So we will just continue looking for a buy continuation. Do not forget to drop the asset you want me to look at in the comment section so that I can pick one or two after this particular analysis. So remember I said we have our last break of structure to the upside, and whatever we are looking out for, we want to see market proceed to the upside. We want to look out for a buy continuation just for us to move with the flow of the market. So where are we going to be looking for a possible buy continuation? Inside this internal structure, inside this structure. This is the range we are currently trading in. Let me mark that out. We're currently trading in between this range. So inside this range, we are expecting that it is very possible for market to use any area for continuation. Because of this impulse to the upside, we can't really so much determine the specific area where market would use for a continuation. But we know that we are inside this particular range where we are expecting that, we want to see market proceed to the upside, right? So I'm going to be looking at possible POIs and see if where market is currently reacting to is a valid zone. Okay, you can see that our primary area of interest has been tested. Our primary POI has been tested, which is the sponsored candle, and we now have a break to the upside. This is our break to the upside. This is where we have our fair value gap. We have a fair value gap. Now, we have two types of point of interest in whatever range you are marking out. We have the secondary and we have the primary point of interest. So basically what I'm going to be doing is marking all of this place out as a point of interest, as an area of interest to be specific. Why? Because that is where we have our fair value gap, right? And that is the area that was left untested for this continuation to the upside. So it is very, very possible for market to come back there. So let's see where market is currently reacting to. Is it a very valid point of interest? It's a really valid point of interest. Reason, we have this trend line liquidity above it, which we were expecting the market would come back and take. We had double bottom. We had what we call Eden double bottom. See the Eden double bottom, which is a very possible liquidity. It's a strong possibility, or it's a strong liquidity for market to come back to take. It's a very strong liquidity for market to take. So that's a double bottom. We have a trend line liquidity. Then just right below it, we have what? Fair value gap, which is really amazing. So where market is currently reacting to is a very valid point of interest. It's really, really a valid point of interest. So what we're going to do is that we're going to look out for continuation. We're going to look out for areas of entry confirmation. If market has taken a particular high, we are not expecting it to take. So now, to the right hand side here, where do we have our last break of structure? We had our last break of structure to the downside here. Our last break of structure to the downside. And this is the high we were not expecting market to come back to take. So you can see that market has taken it. Market has taken that particular high. So where our external liquidity is this high. We are looking forward for market to come back and take this high. So what we're going to be looking out for a continuation now is a buy continuation. So I'm just going to be going to my 4 hours time frame. A 4 hours time frame. So where do we have our last break to the upside? We had our last break to the upside. And this low is a strong low. See what we had. The market still gave us ONT. We had ONT. So we had on top this low. Then based on the impulse that market is moving with, we are definitely not coming back to take this low. So what market is targeting is this high. So where do we get a possible continuation to target this particular high? Let me see 2 hours time frame and see if we can get a particular point of interest for a continuation. Okay, so this is where we had our first change of character. This is our first change of character. So what I am going to be expecting is that market would come back to take this low and use a fair value gap here. I'm not going to mark out any PO high now. Why? Because we still had impulse to the upside. I'm not going to mark out any PO high. And the reason I'm not going to mark out a PO high around here is because of this impulse. I don't want to see market come back so low like this, because if it comes this low, it's very possible for us to hunt this particular low. But based on what the market is doing on the higher time frame, we had an impulse to the upside, which is really possible that market comes back to break this high. So what I am going to be expecting is market come back and break this low and use a fair value gap for continuation. Now, if I am not marking out a PO high, what I'm going to be expecting is an entry confirmation. If I am not marking out a PO high, once market takes out my liquidity, all I am expecting is for market to give me a continuation or a confirmation for me to continue to take this high. So since I have marked out my change of character, I have marked out my liquidity, I necessarily do not have to mark out just any point of interest. I am just going to wait for market to give me a confirmation when it gets around here. And if it does not give me a confirmation, I am expecting it to take a hunt of this low. To hunt this low, move lower, then before we proceed to the upside. So this is my view currently on volatility 25. If there is any changes about my view, I am going to send it to my channel. If you are here to join my channel, you can check the description and join the channel. So if I have any change of mind as regards volatility 25, I'm going to be sending it into the channel so that you guys can see a change of my view. So let's go to the next one. Let me pick one from the comments. So we have somebody say step index. Okay, we have volatility 101s. Okay, let's go for volatility 101s. We have two people mention volatility 101s, so I'm going to be working with volatility 101s first. When we have about two people mention other assets, then we're going to be taking note of it. So this is volatility 101s. If you guys remember in our last session, okay, in our last session we made mention of the fact that we are not expecting market to break this high yet. If you guys remember our last session, what we discussed about this particular high, what we were expecting was, since we had a break of structure to the downside here, we were expecting the market would take this high for liquidity, then use an area here for sell continuation. That was what we analyzed in our last session. But you can see that there is no even confirmation. There is nothing here. Let me go to 24 hours time frame. You can see that market was just moving impulsively. It's not even stopping to even deceive anybody, right? It's not even deceiving anybody to think it wants to sell from here. So what we just had was an impulse movement for this break of structure. So since we have that break to the upside, the funny part is that on this trading view, we can't see where this market is currently reacting from. That's a real issue. We can't see where this market is currently reacting from. That would have given us a lot of clue. It would have given us a lot of things, right, to see if we want to change our structure totally to the upside. However, this is what I am going to be looking out for on volatility 101s, since I am not seeing the previous structure. What I am going to be looking out for is we have a change of character already automatically. This is a change of character. Now, remember, a change of character does not necessarily mean that market wants to move in that direction. A change of character is just market telling you that we are exhausted in the normal direction it is going to. We can still have a sell continuation even after that change of character. So do not panic. So we have a change of character to the upside. My total break, where we confirm me that we have a break of structure totally to the upside, is where market breaks this particular high, which is obviously a weak high. It is a weak high. You can see that we have almost relatively equal high at that particular high. So the next thing I'm going to be looking out for is a buy continuation. For now, right? For now, I'm going to be looking out for a buy continuation. And the reason is because we have this change of character to the upside, this impulse to the upside also. So this is my normal change of character. Even if there's anywhere I am expecting the market would stop and probably just, you know, give a reaction, it should be here. So what I am still looking out for is a buy continuation. So how do I get that buy continuation? Let's go to 4 hours time frame and see possible areas where market can use for a buy continuation to the upside. possible areas where we can have our buy continuation. Okay, first, I am still expecting market to come back and take this low. Why? Because it is a low created just after we had a break or a change of character to the upside. So if market takes this particular high, I'm not going to panic if that is a break of structure or anything. I'm not going to panic about that. All I am just going to do is look out for areas where market can use for buy continuation. So since we had a change of character, market can come as low as taking this low. Secondly, you can see that this low is a weak low. So let me go to 8 hours time frame. I want to see areas where we have our, okay. So my first reaction zone is here. This is where I'm going to see a reaction zone for a buy continuation. That is my first reaction zone. This is 8 hours time frame, and you can see that this is an interest candle here. I am expecting market to break this low. This is a reaction zone. However, I am waiting for a strong confirmation because market is not giving a clear area, right? Market is not giving a clear area for a point of interest, and this is what sometimes market does. You necessarily do not have to just mark out a specific place for a POI. As long as you know what your entry confirmation is all about, POI is just like somewhere you are just expecting market to come back into. So don't get emotionally attached with your POI. You should be more emotionally attached with your entry confirmation because, of course, that is the real deal, okay? You just want to get to know your entry confirmation, basically, because market can use any place. You should have noticed that market can use any place for a point of interest, but I'm going to be marking out this as a point of interest, which is an interest candle that is in alignment with what we call a breaker zone. So I'm going to be marking out this as my point of interest for now. But take note, what I am expecting is an entry confirmation. This buy movement from here is very risky. I cannot mark out this high as a break of structure. Why? Because you can see that we are already moving for a buy. We are already having that impulsive move. And I do not want to jump into the market. Other people might do it, but personally, my strategy does not allow it to just mark out this high for, a break of structure, and then you are looking for a buy continuation here. I'm not going to be looking out for a buy continuation here. Number one, because this low is not even a major. It's not even a strong low. So that's why I'm not even thinking of marking out this area for a buy continuation. So this is where I can, still mark out for a continuation, which can only be a reaction zone eventually. So this is what I am looking out for on volatility 10 for now. I'm not looking out for a possible point of interest or anything. I'm marking out this one as my point of interest, which if it gets violated and we have this low broken, we might be having this low taken. If market comes back to break this particular low, in as much as it is a weak low, it is still a structure that we are not expecting market to currently take, okay? If market takes it without breaking this high, if market comes back to take this low without breaking this high based on this impulse, I am definitely looking out for sales to break this low. So I am not expecting market to break this low for now. And if there's any changes in my outlook, I'm going to be sending it to the channel. If you're yet to join the channel, you can check the description. So I am going to just be looking at this particular POI for now, and I am going to be expecting market to do what? To give me an entry confirmation. This low would be my liquidity, definitely. This low would be my liquidity area, my inducement area that I am expecting market to take. If market takes it, I am definitely not looking for a sell continuation yet until market proves me otherwise. So what I am going to be looking out for is this low is my liquidity. This POI is the POI closer to my liquidity that I can mark out. And if market breaks this low, I am definitely looking for a continuation for us to take this low. Are we together, guys? Drop a comment if we are together. Drop a fire emoji in the comments if we are together. So the next one we are going to be looking at, which is going to be the last one, I do not want to take so much of your time. The last one we are going to be looking at is, let me pick one from the comment section. Okay, volatility 10. Somebody mentioned 75. 100s. Okay. I think I am going to be picking, okay. Let's see volatility 10. All right, let's see volatility 10. Let's see volatility 10, 24 hours time frame. Okay, this is 24 hours time frame on volatility 10. Okay, so our last break of structure. Let's do volatility 10, guys. In our next session, we are going to be looking at more assets, but for now, let's just do volatility 10 as the last asset we'll be looking at. So we had our last break of structure to the downside. Obviously, this is our last break of structure. Whatever you are seeing here is what we call range structure, which is like a structure outside the box. So this is our last break of structure to the downside. Okay. My first POI is very clear. In this scenario, I'm going to be marking out 2 POI. My first POI is very, very clear, which is here. This interest candle. And obviously, what I am also looking at for is a confirmation. But I have a strong POI here. Number one, you can see that we had fair value gap. Fair value gap. So this is my number one POI. Now, if you're going to be looking out for a buy continuation, last week I could not really get so much asset to analyze or to even trade. Why? Because most of these assets are already moving impulsively to a particular direction. They are already moving impulsively to a particular direction, and my strategy does not permit that I should chase the market or enter the market after it has given me an impulsive move or after it has given me a long move. So that is why I just left most of those assets. Now, if I am going to be looking out for a buy in fact, personally, I'm not looking out for a buy continuation. Why? Because we had this impulsive move to the upside already. Where do I want to join? Do you understand? Where do I want to join this particular buy? Where do I want to put my take profits? It's long gone already, and I cannot just be entering a buy at a premium zone. I do not want to see that. So what I am going to be expecting, even if I am going to be looking out for a buy continuation, is for market to at least come back here and give me a confirmation. But I am not looking for a buy continuation. Why? Because our last break of structure is to the downside. And if there's anything that would prove me wrong for this break of structure, or that I am expecting the market would violate and we're going to have a change of structure, it is this high. If market violates this high, I am big on the buys. However, I can still get continuation for buys, right? If market displays my pattern, okay, don't get me wrong. If market displays my pattern, I can get a buy continuation. That is, if it comes back and give me a deep retracement, okay? If it gives me a deep retracement back to this fair value gap, I'm definitely big on buying, okay? I'm definitely big on buying if it gives me that retracement back here. But I cannot join any buy movements here. I cannot join any buy movements here. Market is already at premium zone. So even if you buy, and if you are going to be scalping, you can definitely see buy continuation on probably lower time frame. But this is higher time frame here. This is 24 hours time frame. So if I am going to be looking out for a buy, this is where I am expecting market to come back to. If you are a scalper, definitely you will get a buy continuation to take this high. But for market, then we can make a continuation to the upside to take that high or to enter this fair value gap. So my first PO high for sell continuation is here. My second PO high is here. My second PO high should be here. We have a void that is left unfilled here. Market has not filled this void, so it is extremely possible for market to come back and use this high as our inducement and probably use this fair value gap area or liquidity void area for continuation. So I'm just going to be marking this out as my next point of interest for the sell continuation. Now let me recap what I said on volatility 10. Number one, you can see that market is already in a buy momentum. I do not jump into buys. Most of the assets on volatility indices, which I trade personally, has been going in one direction, hence why I could not really send so much setup on the channel, because there is no possible area where I can use for a continuation. So this is an impulsive buy already. I can't join. So what would make me join is when market comes back and give me a deep retracement here. When market gives me back a deep retracement, I am definitely big on buying to this fair value gap. But if that retracement does not happen, of which if we have an impulsive movement to the upside, this is my first POI for sell. And when market gets to this sell area and we are still yet to, we are yet to fill this fair value gap, we can have market come back here, fill it up and still give us like a hunt of liquidity, or to come back here, okay, to come back here because of the void we have here. So if I am going to be looking for buy on volatility 10, I am going to be extremely patient for market to fill up this fair value gap. Once we fill up this fair value gap, I'm going to look for a continuation. And if it doesn't fill up this gap, market would come back to this interest candle, give me a lower time frame break to the downside. Then I am going to take that short buy. I'm going to take that short sell rather, for market to come back and fill up this place. So this is current on volatility 10. Most of these assets are moving impulsively, hence why I just let them move impulsively. I can join the retracement if the retracement is from the higher time frame, but I do not trade retracement of lower time frame. But if the retracement is on higher time frame, I would definitely get an area for continuation. So if you have any question, drop it in the comment section right now. Let us treat some questions before we call it a day. I would be glad to see your comments. Also, I would be glad to see your input. I'm going to be glad to also see what you think about the live session. I'm waiting for you guys. Let me see your questions in the comment section. Let's take questions for now before we call it a day. All right, I see somebody asking, which of your videos totally explained your strategy from start to finish? No one video explained the strategy from start to finish. Of course, you'll definitely not see any video explain one strategy from start to finish. So what I am going to advise you to do is to watch one of the videos I dropped not quite long, which is, let me see the topic for you. This synthetic top-down analysis, yes, synthetic top-down analysis, you can watch that. It is going to explain what you need to do for your top-down analysis, or you can also look out for, you will no longer be confused on what to look out for after this video. You can check those two videos and it is going to give you some good clues about what you're looking out for in the market and all of that. Okay, so I think that's the only question we have for now, guys. You guys are not asking question, which means you totally understand everything we've been saying, which is really beautiful. So this is going to be all for this morning, guys. I'm going to see you guys in my next live video, which is on Saturday, next week Saturday, same time, same place, same channel. On Saturday, I'm going to be expecting you guys. Invite your friend, invite everybody that you can, and yeah, we are good to go. Have an amazing weekend, guys. Bye, guys.